What's going on, guys? How are you? How are you doing? So you are a beginner and you want to start trading volatility indices in 2025 or synthetic indices, whatever you call them. So you are in the right place, and here I'm going to show you how to start trading synthetics as a beginner. Right? So what you need first is to click the link in the description down below, create your account, fund that account, and come back and watch this video. So what you need to do is, after creating your account as a beginner, you need to find a synthetic index that you can trade without pressure, that you can trade with a lot of understanding, that will not kind of require a lot from you, that is very easy to trade, and that here is a very easy price action. So I'm going to show you that particular index, and I'm going to show you how to trade that as a beginner. So I'm assuming you're a beginner who knows what a candlestick is, what a chart is, and things like that. And if you don't know, don't worry, there are materials on this channel that you can look through and help yourself. So here I'm going to show you how to trade the index volatility 251S. So what you need to do is to go on the M15, and this index is very good, and it is the only index that shows this pattern that I'm going to show you. So as a beginner, you need to start trading this one on the reef, right? So what you need to do is simple. You understand that at the beginning of every day, you will see an explosive move, right? After that explosive move, you will see price retracing back to a point of interest. This can be either an order block or a breaker block. So you might not know what these are, and I'm going to show you these two on the pattern on the whiteboard. Then I'm going to show you these examples on the charts and how you can be able to trade this in live price action, right? So let's just go quickly on the whiteboard and I'll show you. So what you need to understand is this. When price is moving, right? So this is how price is moving, right? So let's just increase the size of this. So this is how price is moving, right? So when price moves like this, right, it does something like this. So this is a reversal, and this candle that you find here is the breaker, and the candle that you find in this area is the order block. So you have to choose from using this or from using that. So what you have to understand is, if you want to use both, you enter at the breaker and your stop loss goes above. Then if you are confident with the breaker, you enter and your stop loss goes just above them. So what you need to understand here is simple. You need to wait for price to retrace back to the breaker here, and you go away like that. So your trade will be in this area and you trade, or your trade will be at the top there, which is the supply zone or the demand zone, depending on the direction, and you go like this. So this is the pattern that you need to understand, and this is the pattern that I'm going to show you, right? So remember, this pattern happens beginning of day. So this line that you see here is occurs around 2 a.m. Central African time. So you can change that time to your area of residence. If you are living in Nigeria, this will be simple. It will be 2 hours behind, which means this will be GMT plus 1, which means it will be what? To be 1. Here it's 2 a.m. right? So you need to be very, very alert to this, right? So the retracement, or most of the times, happens close to this time, which is, let's just say, from midnight to around 3 a.m. we should see the retracement. The retracement should be logged in. Then after that, it will go and break one of the order blocks, which becomes a breaker. You see this? So you see a breaker, and the other thing that you have to see is a move that breaks that breaker should be aggressive, right? Then you see a steady retracement to the breaker that you would have marked, right? So if we were to enter here, your entry will be at this particular point. Why? Because this is where price would have confirmed your direction by this black candle that you see. So you see the black candle, and your stop loss goes above the yellow zone right here. So this is how you are going to do it, and you are going to wait for at least 4 or 5 M15 candles, and you'll be warm and dry. So this is how you actually do it. So let's look at the other one. Remember, we are looking at the midnight. We have midnight, right? And what do you have next? You have what? Your breaker. So this is your breaker right here. Let's just use the what the this next candle, which is the black one. So price, it breaks that aggressively, and it makes sense because it also breaks this one aggressively, which is the low, which gives you more confluence for your trades, right? And this is a steady retracement back to the what, to the yellow zone, and this is supposed to be your what, your entry. So you get your entry there and look at the move that followed that. So this is how you're going to do it. Remember what I'm saying. You have to see a what, a peak first logged in, then after that you have to see a retracement and a break of that particular what, of that particular retracement. On this one, we don't have a peak close to the what, close to the to the midnight line or close to the 2 a.m. line, depending on where you are watching this from, right? So we leave that. But here we had a very good peak. So this one was a peak. If you were to do, or if you were to give it names, or the other way of understanding a peak is to count the levels, right? You have one level. You should see 3 levels of what, of aggressiveness to the what, to that particular peak, right? So you have 1, you have 2, and you have 3, then you have a peak. Then after that peak is logged in like this, you understand that you have to identify a what, a breaker. And in this case, the breaker is this particular candle there, and this is how price did. It took out that breaker at this particular point, and this was going to be your entry after that black candle here. This was going to be your entry, and the stop loss was just going above that pin, and this is how you were doing. If you were smart, you were going to put your stop loss here. Why? Because it's the safest take profit depending on the direction of price. And price, this was yesterday actually, and if you were following us in our Telegram channel, the links are also in the description down below. You would have seen that we took this trade, and this is how it actually went. And on this one, what do you see? What I'm seeing on this one is very, very nice, because we have this. Remember, your peak should be close to the what, close to the midnight area, and you have to see 3 drops to the what, to that particular peak. It can be 3 rises or 3 drops. So here we are using drops, right? So after that, what do you see? You see that we had this breaker, and you see what price did. It took out that breaker, came back, retested, and went. So you don't have to be greedy. Remember, you are a beginner, right? So if you are a beginner, you have to trade carefully and not be greedy. You have to understand what you are doing, and you have to know how you are doing it. So this is what I wanted to show you on Deriv. And remember, click the link description down below, put your email, and you receive an email, right? Create a demo account. After creating a demo account, you upgrade to a real account. You fund that real account, and you link your account to the what, to the MT5. After linking your account to your MT5, you then start trading. And remember, you are trading volatility 251S, and you are using this strategy. Guys, it's been a pleasure. I'll see you in the next video. Shocks, and I'm out.